6 signs your credit score is holding you back. Your credit score is like a financial report card. It opens doors to opportunities or slams them shut. A strong score can secure low-rate loans, affordable mortgages, or premium credit cards, paving the way for your dreams. But a low score can feel like a heavy chain, limiting your options and adding stress to every financial move. The good news? Recognizing the signs that your credit score is holding you back is the first step to breaking free, rebuilding your financial health, and unlocking a world of possibilities. You're already seeking answers, and that's a powerful start toward a brighter financial future. In this article, we'll explore 6 signs that your credit score may be hindering your progress, backed by insights from financial experts and research, including Susie Orman's The Money Book for the Young, Fabulous and Broke, and studies from Journal of Consumer Affairs. By the end, you'll understand these signs, assess your situation, and, most importantly, learn practical steps to boost your credit score and reclaim control. Stay with us until the end, because you might uncover small habits or strategies that can transform your financial life. Let's dive in and discover how to turn your credit score into a stepping stone, not a stumbling block. Sign 1. You're denied for loans or credit cards. One of the most obvious signs your credit score is holding you back is being denied for loans or credit cards, as lenders view your score as too risky. A 2021 Forbes article notes that a credit score below 600 often leads to rejections, signaling financial barriers to opportunities like homeownership or business funding. Consider 2 applicants, Mia and Ethan, both 32 years old. Mia, with a 580 credit score, is denied a car loan, forcing her to delay her purchase. Ethan, with a 720 score, secures the loan easily, driving off with affordable payments. Mia's denials show her score is limiting her, while Ethan's opens doors. Being denied credit means your score is signaling unreliability to lenders, restricting access to essential financial tools. Improving your score can reverse this. To address this, check your credit score via free service like Credit Karma. Pay down one small debt to boost your score by 10 to 20 points. If denials are frequent, focus on paying bills on time for 3 months to show reliability. Ask yourself, are you getting denied for loans or cards, or are approvals easy? Frequent rejections signal a low credit score, but steady payments can rebuild your access. Sign 2. You're offered high interest rates. Being offered high interest rates, often above 15 to 20% for loans or credit cards, is another clear sign your credit score is holding you back, as lenders charge more to offset perceived risk. A 2020 Journal of Consumer Affairs study found that low scores, below 650, lead to costlier borrowing, draining your budget. Imagine 2 borrowers, Sophia and Lucas, both 38 years old. Sophia, with a 620 score, gets a credit card with a 22% APR, paying $220 annually on a $1,000 balance. Lucas, with a 750 score, secures a 12% APR, paying $120. Sophia's high rates show her score is costing her, while Lucas saves with better terms. High interest rates mean your low score is inflating borrowing costs, reducing your financial flexibility. Lowering rates through a better score saves money. To tackle this, compare your current rates to industry averages, e.g., 15% for credit cards. Pay off 10% of your highest rate debt to improve your score. If rates are steep, shop for a lower rate card after 6 months of on-time payments. Reflect on your rates. Are you offered high interest rates or competitive ones? Costly terms signal a low credit score, but improving it can unlock savings. Sign 3. You have unpaid balances on multiple cards. Having unpaid balances on multiple credit cards, especially carrying them month to month, is a critical sign your credit score is holding you back, as it signals financial strain and high utilization. Liz Weston's Your Credit Score, 2011, explains that carrying balances across several cards lowers your score by increasing debt levels. Picture 2 cardholders, Ava and Mason, both 35 years old. Ava has $5,000 spread across 3 cards, paying only minimums, hurting her score. Mason pays off his single card's $1,000 balance monthly, keeping his score strong. Ava's multiple balances show her score is suffering, while Mason's discipline boosts his. Unpaid balances on multiple cards mean your debt load is dragging your score down, limiting your financial options. Paying off cards can lift your score. To address this, list all card balances and prioritize paying off the smallest one first. Consolidate balances to one card to simplify payments. If you carry multiple balances, Commit to paying $50 extra on one card monthly to reduce debt. Think about your cards. Do you carry balances on several, or pay them off? Multiple unpaid balances signal a low credit score, but clearing them can raise it. If you're finding these insights helpful so far, please comment number 3 below to let me know you're here. Your feedback inspires me to share more financial strategies. Now, let's move on to the next sign. Sign 4. Your credit utilization ratio exceeds 30%. A credit utilization ratio exceeding 30%, where you use more than 30% of your available credit, is a strong sign your credit score is holding you back, as it suggests over-reliance on credit. A 2022 The Wall Street Journal article notes that utilization above 30% can drop your score by 50 points or more. Imagine two users, Chloe and Liam, both 40 years old. Chloe uses $6,000 of her $10,000 credit limit, 60% utilization, lowering her score. Liam uses $1,500 of his $10,000 limit, 15%, boosting his score. Chloe's high utilization signals her score is struggling, while Liam's low ratio strengthens his. High utilization means you're maxing out credit, which lenders view as risky, hurting your score. Keeping utilization below 30% improves it. To fix this, calculate your utilization, total balances divided by total credit limits. Pay down 10% of your balance to drop below 30%. If utilization is high, avoid new charges for 1 month to lower it. Reflect on your credit use. Is your utilization above 30% or under control? High utilization signals a low credit score, but reducing it can lift your score fast. Sign 5. You rarely check your credit report. Rarely checking your credit report, missing errors or fraudulent activity, is a key sign your credit score is holding you back, as unchecked issues can silently damage your score. Susie Orman's The Money Book for the Young, Fabulous and Broke, 2005, stresses that regular report reviews catch problems early, protecting your score. Picture two consumers, Lily and James, both 45 years old. Lily hasn't checked her credit report in years, unaware of a $2,000 error dragging her score down. James reviews his report quarterly, spotting and fixing a mistake quickly. Lily's neglect shows her score is at risk, while James's vigilance keeps his strong. Rarely checking your report means you're blind to issues like errors or identity theft, which can lower your score unnecessarily. Regular checks safeguard it. To address this, get your free annual credit report from annualcreditreport.com. Review it for errors, like incorrect balances, and dispute them immediately. If you rarely check, set a calendar reminder to review every 4 months. Think about your habits. Do you check your credit report regularly or rarely? Neglecting reports signals a vulnerable score, but monitoring can protect it. Sign 6. You've missed payment deadlines recently. Missing payment deadlines recently, even by a few days, is a final sign your credit score is holding you back, as late payments are a major factor in score calculations. A 2023 Forbes article states that a single late payment can drop your score by 60 to 100 points, signaling financial instability to lenders. Imagine two borrowers, Emma and Noah, both 50 years old. Emma missed 2 credit card payments last year, tanking her score from 700 to 620. Noah sets autopay and never misses a due date, maintaining his 750 score. Emma's missed payments show her score is suffering, while Noah's punctuality supports his. Missed payments mean your score is taking hits from preventable errors, limiting your borrowing power. On-time payments can rebuild it. To fix this, set up autopay for all bills to ensure timely payments. If you've missed deadlines, catch up on one late account and contact the creditor to request a goodwill adjustment. If payments are late, commit to paying one bill early each month to build a habit. Reflect on your payments. Have you missed deadlines recently, or are you on time? Late payments signal a low credit score, but consistency can restore it. If you're still with me and feeling motivated, please comment number 6 below to share your thoughts. Your support inspires me to keep sharing financial wisdom. Let's keep building your credit strength together. Final thoughts. Now that you've explored these 6 signs, take a moment to celebrate your growing financial awareness. Are you facing loan denials, high interest rates, or multiple card balances? Is your credit utilization too high? Do you rarely check your report, or have you missed payments? If these signs resonate, you're not alone. Many people face credit challenges, but you have the power to turn things around. Recognizing these patterns is a courageous step toward financial freedom, and you're already on the path to a stronger score. Boosting your credit score is your key to unlocking better loans, lower rates, and greater opportunities. Keep working on it by paying down debt, checking your report, and staying on time with payments. Connect with a financial advisor or trusted friend for support, and dive into resources like the Money Book for the Young, Fabulous and Broke, or your credit score for deeper strategies. The steps you take today will shape a future where your credit opens doors, not closes them. Your financial potential is limitless. Keep rebuilding, stay focused, and let your credit shine. If you found this article inspiring, please comment below with your thoughts or questions, and consider sharing it with someone ready to boost their score. Let's keep building a world of financially empowered people together.